So much for joining us today in such a distinguished panel. And of course, I want to thank the audience for staying with us today throughout the day. And we're going to learn a bit more about emerging markets, especially not just from the economists and research, but for people who actually do face the challenges and create the opportunities for us in emerging markets. And with permission, I might start with Anita. I wanted to ask about opportunities in emerging markets. We talk a lot about risks, and we're going to talk about risks, but let's start with where do you see the opportunities?
Thank you, Elena. Before I start, I just want to make a disclaimer. Whatever I say is my opinions and not necessarily representative of the organizations that I'm part of. So starting with your emerging market shop. I think there are economies which are determined to grow, and there are economies which are destined to grow. I basically put all emerging market economies in that bucket of their destined to grow. In the developed market, there's a lot of determination being shown by the central banks in terms of injecting stimulus and boosting growth. But in the emerging markets, just the sheer power of the consumption, of the consumer. And emerging market is basically nothing but the growth of the middle class. The story of emerging markets is the growth of the middle class. China alone has 420 million people in the middle class. And recently in November, there was a Singles Day celebration. On that one single day, Alibaba generated revenues of $38 billion. It tells you the power of the domestic consumer, which exists in the emerging economies. EM economies right now are roughly more than 50% of the global economy, but I think the invested funds haven't gone there, and that's where the possibility of alpha is. Now, the three things that basically assimilate what's happening in emerging markets. One is obviously the consumer growth, and the economic growth, the GDP growth in EM is way higher than the DM. The second thing is the topic of digitization. Humanity follows innovation, and no doubt innovation is still highest in the US, but the adoption of innovation, of newer technologies, I think is happening much faster in emerging markets. If you look at, again, I keep coming back to China because the kind of examples there are very visibly evident of what's happening in EM, right? Today, e-commerce trade in China is roughly 15% of total trade. In the US, it's only 8%, half of that. So while technology may have evolved in the US, its adoption is faster in the emerging markets. The MSCI Emerging Market Index today has 28% of the index is made of technological companies. The S&P 500 only has 24%. Yeah? So there is economic growth, there is faster adoption of digitization, and then we do have the central banks in the emerging markets as supportive and as willing to inject stimulus as it is in the global markets. So all in all, I do see EM as really the place for generating alpha or for getting returns or where the opportunities are.
Thank you very much. Abdulaziz, do you agree? Or
yes, I agree. I agree, and I like to speak on just with on the GCC, UAE, and maybe the GCC, or if we can call them as emerging market. And I think what is playing in our favor is in the region here is the population growth. Our population growth here is helping us. We see more and more national from the GCC going to university now and taking up bigger jobs when they graduate. We've seen they play a role. They used to be taking up simple work. Now they're taking more, advanced technical work. Participating with the expat, or sometimes replacing expat because no longer we need that many expat because more national are taking in the job. with the expat, they save and they send money home. When you have a domestic employment, they work and they spend domestically, so that generate more drive for the economy. More female are coming to the workforce. UAE and some other countries in the GCC is leading. Saudi Arabia is following now, and everybody is accepted female is half of our society and they have to contribute. So now we have a family with a double income, double spend, more consumption, more driving the economy. In the UAE, we have 80% of the women working in banks. 80% of our nationals are women working in banks. We have only 20%. We are minority in my bank. So women are taking more aggressive job in certain field in the GCC. So all these are helping to drive the emerging market economy. And our market is also opening up for the expat. We are giving them a chance to invest in our market. Stock market is open. Real estate opportunities in some countries are also allowed to allow expat to invest. So money is kept on ground, onshore, rather than going outside. So I think in our region, this will drive consumption and will drive more growth to come.
Thank you so much. And Hisham, in terms of the emerging markets, but also specifically Africa, MENA, Egypt, how do you see the opportunities?
In terms of the middle class in emerging market, not only in Africa, but generally worldwide, is growing. And this is really the key driver for growth. The other unique thing about emerging market is the trade. If you go back to 1990, Anita, you're going to find the emerging market trade between emerging market countries was about 5%. Today, that number went up to about 40%. That means there is real opportunity for emerging market contribution to the worldwide GDP. The second important thing is how the service sector, and that includes technology and digital and so on, plays a role in emerging market economies. By far is growing faster than developed markets. If you want to go specifically in Africa, it's a fantastic story because I've been around the continent over the last 2 or 3 years, and I have felt things on the ground there. People are eager to develop. Technology in Africa is a continent made, is not an imported product. Plus, if you think about the fintechs and the investments, 100 of the top fintech companies are in emerging markets in the world, which is half of the top fintech companies. Africa specifically invented the mobile money with M-Pesa. And there are a lot of success models how we are moving now from just mobile money and how to use the data of the mobile money movement and payments into availing credit to individuals. And most of the small upcoming fintech companies in Africa are focusing on access to finance. And access to finance like the super micro, nano credits to the micro credits. And it's basically about data and payments. This is exactly what Alibaba did in terms of looking at payments, then availing credit to small and medium-sized companies. So the same thing happening in Africa. The free trade agreement that was signed and approved by the majority of the 54 countries is a fantastic opportunity there. Because mind you that we have a big challenge in Africa in terms of inter-Africa trade. That goes to the geography of Africa. Our friends in Europe will understand that clearly. Rivers in Europe have played a big role in trade. Rivers in Africa are different. Rivers in Africa are full of waterfalls, so they cannot be used for transportation. So there is a big room for investment in Africa in infrastructure, either in terms of roads or railways. And that will clearly materialize the potential for that continent. The willingness for the African countries, the 54 countries, to work together is extremely high. From open skies arrangement, now they are talking about one passport in Africa. The development happening in that continent that will help GDP growth are by far faster than what happened with the European Union. And I will tell you something political. I was telling one of our colleagues yesterday, within the European Union, they may vote internationally separately in different directions. Well, let me tell you one thing. Anyone who is looking for a position at the United Nations or one of those big positions in the world, the first continent they visit is Africa, is Addis. Why? Because it's one continent, one vote. If they decide to vote for X person, the 54 countries, they vote for that X person. That is an outstanding result. And if you think about the continent that way, that means that the spirit of collaboration within that continent is extremely high. We as a bank, for example, we started really recently to recruit people from African universities and train them in Cairo. We can keep some of them back home, or they can go back to their countries. So the more you do of that, the more you can see the opportunity there. I'm here talking about growing middle class within the continent. I want you to go and visit somewhere like Abuja or Nairobi or Kigali, and you see how the middle class is growing, how people are disciplined, how they love their country, and they want to grow, how they want to make money, okay, and develop. There is a clear desire by governments to, what you call it, lubricate the road for the private sector to grow. Not only in technology, but in any sector. They are very open for collaboration between countries. That continent, in my personal opinion, 20 years from now, will be the Asia of the 80s in terms of growth. Education is good. I meet personally ministers from some African countries are really impressive, very well educated. And countries that were in civil war a few years ago, now they are choosing their best talents to lead the country. That again is very promising. The digital economy, just to give an idea, constitute only 10% of GDP within the continent. That compared with the average developed markets of closer to 20%. This is an opportunity there. You sit down with politicians and you talk about the digital transformation. I was part of a task force that was formed by the European Union and the African Union to come up with a digital strategy for Africa. And I felt it clearly that there is a lot of openness for the digital economy there, transformation there. There are plenty of examples. I don't think we have the time to go through it, but I can give you an idea of a company in Rwanda, for example, that in healthcare. And what they do is you call a call center. It's AI that deals with the symptoms of the sickness. Then if it's a simple thing, it describes the medication and ask you to open my location, and then a drone brings you the medication wherever you are. A drone in Kigali. And if it's complicated, it's escalated to a doctor on the call center that goes into a discussion, and then those are the things that are coming up on the continent. If you want to talk about innovation, I think is the continent for innovation. I will stop here and we'll carry on later.
Thank you so much. If I could follow up with maybe Anita, where there are two big trends on the panel, was the middle class and opportunities for productivity growth, digital transformation. On the middle class, are you worried that with the slower global trade tensions, that will we be able to sustain that middle class growth and services growth in the face of slower manufacturing and trade?
So the trade is about cross-border trade, right? So the thing that I was talking about in a lot of emerging markets, the internal consumer demand is growing, which is benefiting these economies to grow. Now, it's not that the trade friction that exists in the world is not affecting global growth. Yes, of course it is, because growth comes from two factors, right? One is the consumption, consumer growth, and the other is the investment growth. So the investment growth, the investments have definitely slowed with very uncertain sentiment that exists. But then this has been going on for 2 years now. How long before the investor fatigue sets in and people just begin to reach their capacity and say, now I'm going to start investing because my local economies or my inter-EM trade is picking up, which, as Hissam alluded to, it's not just EM exporting to developed markets, it's also EM exporting to each other. And there the friction is not there. We've seen the Asia Pact and China included the trade pact happening there and the bilateral trades that happens within Asia. So, and the fact that current trade agreements are actually for the manufactured goods. Probably they did need to be renegotiated. They were set up 30 years ago when the world was more manufacturer-based. Now, e-commerce, the intellectual property rights, the digitization, the service sector, all these play a much bigger role on global economic growth. So the trade agreements have to be looked into again and revised and done that. So I'm a little hopeful that maybe the worst in terms of impact of trade dispute is behind us. And from here, we will probably see a little bit more positivity come in.
Can I ask a quick, please go ahead, please.
I was about to comment on Anita's statement. The openness as well is, for example, in Africa, there are discussions now about open banking. Having open banking in Africa with all the challenges around open banking. That, again, is an opportunity to avail access to finance and make it much more competitive across the 54 countries.
Thank you. Can I ask a follow-up question? Is it maybe that we're not even measuring GDP properly? GDP is a concept that was invented for the more industrialized times, and maybe we're not even capturing the services properly in the GDP numbers?
Probably, yes. And the GDP is also a lot about reported numbers, whereas in emerging markets, a lot of them have substantial gray markets that do not get captured. So if you look at, say, for the likes of India or Indonesia, the reported GDP versus the real GDP is very different. Yeah? And yes, within the reported GDP number, maybe that needs to be looked at as well.
And on top of that, how do you measure the added value coming from the digital economy? How are we going to measure that? I don't think that we measure that properly at all.
And Abdulaziz, you started talking about the productivity improvement and also sustainable growth. You know, one thing is the average temperature in the room, badly or not measured, but another one to have sustainable growth that benefits all members of the society. What should be the solutions?
Well, the solution is all the emerging markets have really developed their economy on export, and they have done well in export. And we have now come to know that when you have a trade partners, it's not predictable. So you may have a good relationship with one country, but then borders comes down and shut down. So now I think more of them start developing their local economy. So more economy developed, they take that money and put it into the economy, they develop their local economy, and then that's what they're going to develop, local consumption. And so maybe 50% of the economy is 50 local, 50 export, maybe 60-40. But they are realizing that we need also not solely depend on trade, but also we can only survive if we have a very domestic economy.
And in that respect, what are the trends, specifically in GCC and UAE, that we might be missing? Well, we talk about inclusion and we talk about reforms, but we're having oftentimes a very outsider look. What is it we're missing in terms of the opportunities for this sustainable growth?
Well, in UAE, we have realized this a long time ago, and we want to diversify our income. So today, we have, while we still discovering new oil and new gas fields in the UAE, and we produce 2.5 million barrels a day, but we decided a long time ago we need to diversify, and that today we have 70% of our income is non-oil, and our target by 2030 we want to go to 90% non-oil. So diversification of your economy is critical, and not depend be it on oil or trade is also addictive to have an easy income to drive the economy. So diversification is very, very critical.
And in terms of you started talking about the financial inclusion, digital transformation. What are the key highlights that we should be paying attention to?
The country drove the financial system to have a financial inclusion, and a few years ago, this year we'll be launching, a digital wallet where people can remit money, mobile to mobile, person to person, just on the mobile, and we are targeting in 3 months we're also going to expand it for total inclusion. So anybody can receive and pay through their phone even without a bank account. So your phone will be your wallet, and you will be able to pay at any store in UAE, and you can pay your utilities, you can pay anything even without having a bank account. As you know, we have a large population of laborers, and we want to make sure that every single one have access to banking system, and this is a very inexpensive solution. So then it has evolved. Banks have now launched even for the SME sector, to make financial inclusion for SME. For us, most of the SME, they all need advisory role. They need just to open their bank account with the bank. They don't need sometimes financial support. But banks treat them that you have to show me your balance sheet, you have to show me your trade license, 5 years experience. They have to interview their CEO, CFO, and make it so difficult. But SME don't want that. They want, give me a facility, advise me how do I set my account, and make payment. So banks now, we have in Mashreq, we have a digital solution for SME, totally onboarding, end to end. We don't see the customer. He onboard all the information available online. We only visit him once to authenticate him, and then his life is on, and then start to do banking with us without all that difficulty, etc. Now, next phase, probably if he needs some financing, then you go to the next phase. So making banking available to the small startup, SME, and non-bankable people is a very critical for us in the UAE.
Thank you. Hisham, you wanted to add something?
I love what Abdulaziz is saying about the onboarding customers, and because and his discussion about the SMEs, out of experience, most of the small companies, they are happy to get their financing from their suppliers or their off-takers. They don't ask them to show them the license, interview with and financials, and so on. And even when they are past due, they don't pressurize them like bankers. Because bankers, when they are past due, they go to them, you are late, there is a delay interest, and so on. With the suppliers and off-takers, they know each other for many years. So they are happy, even if they are charging them higher in terms of embedded interest rate or financing cost. The critical part, and I agree with Abdulaziz, for us as banks with the SMEs, is the financial services. Providing in an easy way, digital way, so he doesn't need or she doesn't need to leave her office, go to the bank to do a transfer or make a payment and so on. So the out of experience dealing with SMEs, they require the digital services more than anything else. Trade finance and digital platform, payments, payroll, and so on. The other thing which I have seen in Africa, the success stories about financial inclusion, is that they kept away from the pen and paper push. The minute you start to use pen and paper, then you don't have an inclusion, okay? Keep the paper and pen away, they are history, okay? The future is their mobile, national ID number, or national security number, and that's it. You are on board.
Thank you. Anita, I wanted to ask you a question more on the risks. IMF usually always puts in their reports there is no room for complacency. So we talked a lot about opportunities. What are the risks that you see for emerging markets?
There are no free lunches. So for all the opportunities in the emerging markets, obviously there are a lot of risks. Yeah? One of the key risks that I find is quite often we don't know what we don't know. When we invest in a company, you don't know, track record and trust factor will probably take time to come. Yeah. So data transparency is a big issue. Regulators, the changing regulatory landscape, not just changing, but it quite often uncertain and unknown kind of landscape. So let me take an example. So if I want to do foreign exchange trading in UAE, right? And UAE is a relatively advanced regulator base in GCC or Africa, this region. There are 5 regulators that I can go to. I can go to the central bank, I can go to ADGM, I can do DIFC, I can do ESCA, DMCC. And this is an economy of 10 million people, and there are 5-6 different regulators, and I don't know who I want to use. If I want to manipulate the system, I can use either of them. If I want to be clean on paper, and despite all these regulators, there still may be loopholes where I can do bond trading, I can do equity trading, but I cannot do accept money for FX and things like that. So these kind of inefficiencies in governance and regulatory system exist in emerging markets. Yes, of course, for higher return, you have to accept it as part and parcel of your risk. But sometimes I don't know how big that risk is, that mysterious unknown.
Can I
Please.
add just, one of the issues in the emerging market is complacency by the government. When they stop slowing down the reform, they think we've been successful, and it's okay, we have done enough reform. I think in the emerging market, you cannot do enough reforms. You have to continue doing reforms and reforms until you clean up everything. The second is, in the emerging market, is you got to control inflation. You cannot let inflation loose, because that destroy all that middle class people, that saving is disappeared, and with this high inflation is a problem. Third is high debt. Then if the country is successful, we all run around, we run around to lend to this country to the maximum. I think they have to constrain themselves from high debt, because you cannot survive on high debt. Of course, and then we have seen it in some of the region here, in Iraq or in Lebanon, or social unrest can also destabilize you.
Thank you. I need to
So I want to,
that. Yes.
adding to the risk, another risk that I see in emerging markets is basically the currency fluctuation. If you look at most EM currencies are down 40% since 2013 against the dollar. Yeah? And currency fluctuation based on their central bank policies, based on the fact that a lot of EM economies run twin deficits. There's current account deficit and there's a budget deficit, which means they're forever sellers of their currency and buyers of dollar paper, keeps that pressure on, plus the geopolitical risks around and how that can cause flight to safety and affect your investments. Yeah.
Having said that, what would you recommend for the GCC, for example, countries or other emerging markets in terms of flexible or fixed or semi-managed? Sorry.
I was about to ask that question.
How good you say so. I'm the bad one now.
Yeah. There are no rights or wrongs, but to move to a flexible exchange rate, an economy has to be ready to be able to manage the currency, right? So say, for example, in GCC, with oil price falling and it's no longer petrodollar economies kind of thing, maybe the pegs do need to be looked at, but is the region ready for that? Because for any currency to be freely floating, the 3 things that an economy or a central bank needs to take control of the currency, first, there should be some statistical data collecting organization that collects reliable data about where the economy is, right? Right now, quite a few emerging market economies probably don't have reliable data collections. And if you cannot collect data about your economy, how will you manage the monetary policy, right? You don't know where the economy is going up or down. The second is then to be able to analyze that data and be able to formulate a monetary policy strategy. You need experience and talent, which is still evolving in quite a few EM markets. And the third is, once you have thought about a monetary policy and whether you want to raise rates or down rates or whatever for your currency, how do you transmit it down? You need very deep capital markets. Yeah? The likes of Asia does have quite a few, India or China do have local currency markets. Maybe in the Middle East and Africa, we don't have that. So you need to deepen your local currency capital markets to be able to transmit your monetary policy and to be able to control your currency. So right now, I think we are a little far away from achieving that goal.
And can I just follow up? How far? Is it long-term or medium-term far?
Depends on the definition of medium and long term, but the pace at which the reforms are happening, I would like to believe more medium term.
Thank you so much. Hisham, would you like to comment on the exchange rate?
Well, I would add that there is no one size fits all. It depends on the dynamics of the economy. I mean, let's compare Egypt, for example, with the Gulf. Do we have the same economic structure? No. Should we pick the currency? We paid a very dear price for picking the currency like the Gulf. The Gulf, they have their reasons. So, and I'm talking about neighbors here. So there is no one size fits all. There is no one model. Morocco, on the other side, I think they are thinking about a crawling peg now against the dollar or managed float against the dollar. Having a fixed currency or pegged currency to specifically dollar or euro has to have a very good reasons. The Gulf had the reasons, other countries don't, and because of the oil as a commodity. That's it.
I think you have to have a long-term view. You cannot be selective. When it's convenient, I want to pick. When it's not convenient, I want to de-pick. So you have to have a long-term view. For the UAE, I think picking us to the dollars have helped us tremendously to give you stability. I mean, Anita you were talking about that currency fluctuation, etc. So people know you get your money in, you get your money out. It's very stable, and it has helped us. And there are other source of tools you can manage in case you have different cycle of the economy. But so far it has helped us and has been debated along and talked about it. And so far the consensus, leave it. It has worked so far and we'll leave it there.
Thank you.
The fiscal policy as well plays a big role about your exchange policy, because the Gulf kept a discipline as well about their fiscal deficits or surplus, contrary to other countries that they want to peg to the dollar, and meanwhile there is no fiscal discipline there.
Thank you. I wanted to ask maybe a bit different question. We talked about digital transformation. In terms of talking about macro financial policies, how does the digital transformation is going to change our thinking about exchange rates, fiscal monetary policy coordination? Are we prepared? It could affect transmission mechanisms, for example. Do we have the tools to think about it? Do you think it's just sort of more financial inclusion and that's it? If you would like to.
I don't know. But it's gonna be. The only thing I know is things are changing and they're gonna be faster. Life is moving everything is now faster and quicker. If you talk about transmission, the transmission is going to be faster. If it took like 6 months before, it's going to take 6 days now. So the regulators or policymakers have to be prepared that the changes or the volatility are going to be higher and the changes are going to be faster.
I think in the emerging market, there is no legacy. So it's easier for us to adopt any transformation in technology. So, we have seen it, in the GCC. We have adopted, in the UAE, we adopted the first smart gate at the airport in the world. And people thought, this is crazy, how can you do it? Now, the smart gate is all over the world. Even the US finally, accepted this is a good way to, welcome a visitor. So, legacy issues behind us. We are open for new ideas. And our surprise is consumer adapt very fast. In some areas in the UAE, you cannot just pay by cash. You have to use some kind of device. to pay. So, and they love the experience, the customer experience. You know, when they shift to digital, they love it. So that will encourage more and more transformation in digital. And what will that do? Whenever you go digital, you save in the economy. I mean, we discussed this digital wallet in the UAE launched this year. This will have, you know, a 4% saving on currency in circulation, because 4% in currency in circulation get destroyed every year. So central bank have to reprint. And all that circulation, we have shown to our central bank that, you know, you will save 4 billion dirham over so many years, because we're going to eliminate the cash in circulation, and this is helping nobody. It's a waste of energy. So that digital transformation, I think it will have a huge impact.
Thank you. Anita, do you want to jump in?
You need to regulate something. This risky side of this whole technology and digitization is the fact that it's very difficult to regulate it, or at least for the time being, there is no real regulation controlling it, right? But to regulate something, you first need to understand it. And technology is moving so fast, we are sitting on shifting sands. So just gathering information and understanding it and then deciding how would you regulate a robot doing wrong thing and accidentally somebody losing money, because you can't put a robot in the jail kind of thing, right? Or an unethical use of artificial intelligence, how do you control that? Or the fake news kind of thing, how do you control that? So the risks in the digitization is one of my big worries, that it's unregulated at the moment and no one really seems to be knowing how fast and when we regulate. I'm hoping that hopefully in the next year or two, at least G3 or G4 or G7, somebody would have some credible regulator in place for managing these risks, the AI and IT and technology digitization related. But right now, I have no real clarity on how we'll reach there.
Thank you.
Just talking about the digital transformation for finance, I have some numbers here. It's quite interesting. Just for Africa and the Middle East, the digital financial transformation will increase the GDP by about 7.4% per annum. The GDP actual growth from between 2000 up to 2025. And access to finance, especially in Africa as well and the Middle East, 50-50, male and female, will increase. The job creation is more than 90 million jobs over the coming 20 years. On contrary to what people think, that the digital transformation and the financial service is a job loss making. No, it's in the contrary. It's job making. It creates more jobs.
Thank you. I think on this fantastic note, we could wrap up the panel. You know, these are wonderful numbers. We're going to be back here in 2025 checking on those numbers. Please, thank you to the panelists.